Okay, so Bismillahirrahmanirrahim. Assalamualaikum and good afternoon. Okay, my plan for today is to lecture on chapter 4, which is project analysis and evaluation. So if you want to look at the classroom, so you can have a look at this notes chapter 4. So this one is a full-time one. And then also you can have a look at study questions later on. But as far as weekend students is concerned, then you can refer to this later on. I will update study questions and also I will update you the materials and so on. Then you can see later when you do the briefing. Okay, now let's move on to the chapter 4, project analysis and evaluation. Basically, we want to analyze the project, whether the project is profitable and the project can deliver losses. Okay, so you see, the most important indicator in project evaluation are net present value. Because if your answer for net present value is positive, there will be profit. But if your NPV is negative, that means it is losses. So it's a simple rule and that. And then we will calculate break-even analysis. Later on, I will share and I will explain to you in the formula. There are 3 types of break-even. Break-even means that zero profit. There will be no profit or no losses because we want to find the quantity that have a break-even point. And then operating cash flow, sales volume and break-even. And then also we will cover operating leverage. We are talking about the degree of the efficiency of the company. And the last one, capital rationing. Okay, now, you see here, the second point, scenario analysis. The scenario analysis, the most important thing, the objective of the company is to maximize profit and minimize losses. So if best case, meaning that you maximize your revenue, you minimize the cost. That is a base scenario. Because you want to achieve the maximum profit and minimize losses. But the worst case scenario, if the companies tend to have a minimized revenue, lower incomes, but somehow they have to pay with the high cost. So that one is a worst case scenario. But of course, you want to aim for the best. Okay, so these are the example, but I'm gonna explain to you further in the study question and also the answers that will be given to you later. Okay, so these are the example of the calculations. So you can have a look at that. Best case, worst case. Okay, it's a different. Base case means that is a borderline, not borderline, just a normal line. Worst case is the worst scenario. Best case is a best scenario. And then the sensitivity analysis, we are talking about calculating the NPV. And then simulation. I'm skip up a little bit because this slide is too complex from the textbook. So I'm going to explain to you one by one on the calculations. Okay, so these are the example of cost and so on. Average marginals, break-evens. Accounting break-evens. Because you want to see how much a quantity, that ideal quantity that you will get from the accounting break-even. And also you have cash break-even and also financial break-even. And then you also have to calculate the leverage. That means the relationship between sales and operating cash flow. Okay. And then these are the example. Okay. Now, let's go to this list of formula. Okay. So list of formula. Okay, you need to understand the formula before you answering chapter 4. You got the access for the list of formulas in the notes? Yes. Okay, now the basic profit and loss formula is total revenue minus total cost. That means total income, that means total cash inflow minus total cash outflow. So therefore, if your total revenue is more than total cost, definitely it will be profit because revenue is high, cost is low. However, if you reverse the situation, the total revenue is less, but somehow the total cost is high, it will be losses. That means you will get negative if you minus. Now, how to find total revenue is simple. Selling price per unit multiplied by quantity sold. That means price per 1 unit. For example, if this one pot, this one pot is equal, you are selling for 5 ringgit. Therefore, your 5 ringgit multiplied by, let's say you produce 10,000, 5 ringgit multiplied by 10,000. Okay, that is a selling price because you are selling this one for 5 ringgit, for example. However, the total cost, okay, please be careful with this formula, variable cost plus fixed cost. Okay, why variable cost is VC multiplied by Q? Variable cost is a cost that involves a production of one product. For example, if this pot, the cost is 2 ringgit only. You're selling for 5 ringgit, but the cost is only 2 ringgit because the cost of the materials and so on. Okay, so that means your 2 ringgit multiplied by 10,000. And then you need to plus fixed cost. Okay, fixed cost, you don't have to multiply by Q because fixed cost is a cost that involves millions. It's a fixed only. So FC, because why? I don't want common mistake made by student is they put FC multiplied by Q. So that is a mistake. So FC you don't have to multiply by Q because it is already fixed. So you just take the number. So the conclusion, if you combine formula number 2 and formula number 3, which is total revenue minus total cost, is this one. SP multiplied by Q, which is formula number 2, minus bracket, second bracket, VC multiplied by Q, close bracket second, plus FC, close the second bracket, and then close the first bracket. So combine with this formula number 2 minus formula number 3, you will get total profit and losses. Okay, so you need to understand. Okay, now I stop here for a while for question number 2, 3, and 4 because I want you to look at the study question for question number 1. Not number 1. Sekejap ya, let me check. Question number I think question number 2 lah. I want to start with question number 2. Okay, question number 2. Okay, please stand by with your writing, writing gadgets, so on. I start with question number 2 first. Okay, please read this question for 2 minutes. Try to understand question number 2, chapter 4, and then I will explain to you how to calculate question number 2. Okay, sorry. Okay. Semio is here. Welcome, Semio. Okay, now, if you look at question number 2, all right, let me read out for you. Okay, K2 Everywhere Corporation can manufacture mountain climbing notes for $31.85 per in variable raw material cost and $22.80 per pair in variable labor expense. The shoes sell for $145 per pair. Last year, production was 120,000 pairs. Fixed costs were $1,750,000. What is the total production cost? What is the marginal cost per pair? What is average cost? If the company is considering a one-time order for an extra 5,000 pairs, what is the minimum acceptable total revenue from the order? Explain. Okay, now, the first thing that you have to do is you need to extract the information first, one by one, because you see this question, they given you one shot information, which is too challenging to look at. Now, what I will do is, the first one is, you see here, 31.85 stands for variable raw material cost. So you just put in the first question, variable cost. Okay. So for variable cost is 30 per unit, 31.85 per unit. So that is a first information. Okay, and then somehow you see here 22.80 per pair in another variable labor expenses. That means in this question you have two variable costs. So what you have to do is you just add up these two. Okay, because you have two variable costs. But if you have one variable cost, there is no problem. You can take it. But since you have a two variable costs, you need to add up those two. Okay. So if you press calculator, please, Kashim. If you have three variable costs, means that you need to add up all three. Yeah. So because this question, they given you two variable costs. Just show. Okay, 54.65. Okay, so these are the variable costs. Okay, remember, yeah, like I told you earlier, if you have one variable cost, you just take it as one variable cost. If you have two variable costs, you need to add up two variable costs. If you have three variable costs, you need to add up all three variable costs. Okay, now the next information, the shoes sell for 145% per pair. So the word sell indicate you that is a selling price or price per unit. We call it price per unit. Okay, which is dollar of 145. Okay, the next part. Last year production was 120,000 pairs. This that indicates here is this a quantity. Yeah, quantity, which is the symbol of Q. Yeah, okay, put quantity 120,000 pairs. Okay. Which is your Q. Okay, the next one is a fixed cost. Fixed cost, yeah, the question said fixed costs were $1,750,000. Okay, let me copy and paste this question into a new document. This is question number 2. Okay, boleh Daniel, yeah, Manira, feeling good, Now, the first question, total production cost. Alright, total production cost meaning that you need to add up all the costs that is related to your calculation, which is basically variable cost plus with fixed cost. However, if you expand the formula, variable cost means that VC multiplied by Q plus fixed cost is a fixed cost. Yeah. So that is how you expand the formula. Total variable cost plus total fixed cost. VC multiplied by Q plus FC. Now, by looking at this information, you sort out the information already. You know that it makes you easy for you to sort out your answers, which is $54.65 plus with Q, which is 120,000 units pairs, plus with FC, which is 1,750,000. Let me know if you do not understand in between. Yeah. Okay, Tiang, maybe okay if you're okay. Razid. Okay, calculator help. Much. So you get the total cost of. Just show. Total straight away. 8308. Should have this answer. Cross check Rosita. Betul ke? Betul ya? Okay. So you answer part of the question, which is total production cost. Okay, this one is done. Total production cost is done. The next question is, what is the marginal cost per pair? All right, for your information, marginal cost per pair is almost similar with variable cost per pair. You don't have to do calculation. Okay, so therefore it is same as 54.65 ringgit. Because marginal cost is basically the change of from one unit to one unit. Yeah. Yes, correct. Okay. Now, the next part is average total average cost. Okay, for average cost, the formula will be simple because the word average, you need to average with the quantity, which is logically the formula should be this one. Total production cost divided by quantity. Because total production cost, you already got the answers earlier. Yeah, you just take the total production cost, which is 8,308,000 divided by the quantity that you declared earlier in the question, 120,000 pairs. Okay, so the average cost will be, if you press the calculator, you will get 69.2. To what? To decimal, please. 2 to 3. Okay. That means one pair of shoes costs around $69. One shoes. Remember, the selling price in the question is $145. So there is a potential revenue because of the selling price is higher than average cost. Okay. Any questions so far? Feeling good, Feeling good? Okay, the final question in the question number 2, if the company is considering a one-time order for an extra 5,000 pairs, that means earlier we have 120,000 pairs, right? They having an extra order by adding more 5,000. So that means it will become 125,000. Yeah. What is the minimum acceptable total revenue? So total revenue is simple by using the total revenue formula, which is selling price or price per unit multiply with 180. Okay, price per unit earlier in the information, we have $145. Multiply by, okay, so this is a tricky part because the question asks you if you order extra 5,000 pairs. Please do not multiply by 5,000 only because 5,000 is an extra. Do not forget the original figures, which is 120,000 plus 5,000. Because they want to know how much the total revenue that you will get if you order extra 5,000 pairs. That is one. The question says that, so minimum acceptable total revenue. It's not profit, it's a total revenue only. Yeah. Okay, good. So you get 18,125,000. Okay, please do not confuse total revenue and profit. The revenue is only from the sales. yeah, without deducting the cost. But for profit, you need to deduct by the cost. So that is simple, because I spotted from the past experience that student tends to mix up between revenue and profit. And so that is two different elements. Yeah. Okay, so far so good. Okay, so far so good. So we are done with question number 2. Okay, earlier, let me revisit back the list of formulas related to selling price, total revenue, total cost. Therefore, the formula is from formula number 1 until formula number 4 only. Because formula number 5, 6, and 7 is a different section. A different section. Now, let's have a look at question number 1. The question number. Or any other question? Until we can take a 2 minutes break for a while, and then after that we will continue with the question. So you need to take some fresh air a little bit. Yeah, after this will be question number 1. It's okay. Sorry, I'm on recording actually. Recording. On recording. Because this recording we can. Okay, now let's move on to question number 1. Get ready. Get ready. Okay, now. Okay, let's have a look at question number 1. Okay, get ready. NSI manufacturers biotech sunglasses. The variable material cost is $10.48 per unit, and variable labor cost is 6.89. This is the same case whereby they identified two variable costs. Yeah, one is 10.48 and dollars and 6.89. Therefore, you need to add up these two. So for question number A, just add up these two. So you get the answers of. Let me check with the answers. Yeah, this one. Same thing. Yeah, same thing. Okay, for this one, you can snap the picture, no problem, if you don't have some time. Okay. So you can snap the picture, and otherwise I can share with you the answers after we finish lecture chapter 4. Yeah. Previously you got chapter 2 and 3 answers, right? Okay. So next I will share you chapter. Okay, now for question B, suppose NSI incurs fixed cost of 870,000 during a year in which total production is 280,000 units. That means 280,000 is a quantity. What is the total cost for the year? Yeah, remember we use the formula of total cost, VC, variable cost multiplied by quantity plus fixed cost. And then remember you already calculated variable cost, $17.37 multiplied by 280,000 unit plus the fixed cost of 870,000. So once you perform a mathematical function, you will get this answer, 5,733,600. Which is formula number, let me check, formula number 3, I think. Yeah, this one. Formula number. Okay. All right, the last part, question C, if the selling price is 49.99 per unit, this is your price per unit because you want to find the revenue. Does NSI have a even on a cash basis? If depreciation is 490,000 per year, what is the accounting break even point? Okay, so I will teach you until question number 1 only, because for question number 2 it involve this one, formula number 5, 6, 7, which I will 8 and 9, which I will teach you tomorrow. Yeah, tomorrow. Yep, don't worry. Yeah, Nadira is like, oh, hold on. Okay, do not worry, because I will teach you some tricks of this formula. You see here, formula number 5, 6, 7, the denominator is similar. Bawah dia sama. Ya, cuma atas dia lain-lain. Accounting break even, fixed cost plus depreciation. Cash break even, only fixed cost. Financial break even, fixed cost plus operating cash flow. You see here, formula 5, 6, 7 same, which is denominator sama. Cuma beza dia atas ni saja. Ya, atas ni saja. So that's why you kena ingatlah. Okay, now I only teach a question C1 because for C2 will be tomorrow. Yeah. Okay, so you can snap this picture. So profit and loss by using the formula number 4, SP multiplied by Q multiplied by VC times Q plus FC. So therefore 49.99 ringgit, not ringgit, dollars, multiplied by 280,000 unit minus variable cost earlier you calculated at A, $17.37 multiplied by 280,000 plus 870,000. So by performing mathematical function, you will get 8,260,600 ringgit, which is profit lah, because of the positive value. If you get negative value, means that is a losses. Don't worry, I know this this might be a first time you seeing the formula, but later on if you do exercise, you might be familiar with that. Yeah. But for, like I said earlier, for question number 2, it is related to formula number 4, 5, 6, which I will teach you tomorrow. Yeah. But for now, I want to introduce you from formula number 1, 2, 3, and 4 first, because the class is 1 hour only. Okay, any question on question number 1? No, okay, everything good. Okay, if everything good, so hold on a second. Okay, so for class, for weekend class, that there will be a part 2 of this recording. Okay, so stay tuned and I will share to you the first recording once it is uploaded in the. Okay, so thank you very much. I will see you on the second recording. Okay, have a nice day and take care and bye. Record untuk dorang sekali lah. Okay, so let's continue what we have yesterday. All right. Yesterday, last class, we revisited formula number 1, formula number 2, formula number 3, and formula number 1, which to calculate profit and loss based on the total revenue, based on total cost. And then we use total revenue to minus with total cost to get the profit and loss. Now, let's have a look at formula number 5, 6, and 7. Okay, the purpose of formula number 5, formula number 6, and formula number 7 is to calculate accounting break-even, cash break-even, and also financial break-even. And for your information, break-even means that what will be the ideal quantity if the profit is 0. If the profit is 0, what will be the ideal quantity? Because that is a level that we want to measure. So the difference between these 3 formulas, actually at the nominator side. At the denominator, this one, it's the same. Price per unit, if you look at the denominator, price per unit minus variable cost per unit. Same goes to formula number 6, and formula number 7. At the bottom, that is the same. The difference is up there, I mean the nominator. For accounting break-even, fixed cost plus depreciation. Cash break-even, fixed cost only. And for financial break-even, fixed cost plus operating cash flow. Okay, but there are certain questions that you have to operating cash flow is not given directly. Dia tak bagi secara direct, but what you have to do is you need to find operating cash flow whereby initial investment divided by PBIFA KN. PBIFA means that you need to refer to a PBIFA table. Okay, so we use technically formula 5, 6, 7, and 8. For formula 8, just to calculate the operating cash flow if the question is not given directly. Okay, so now let me go through you questions. Share this one. Okay, let's have a look at number 4. Okay, question number 4. This one I make it a shortcut, so you can take some picture. You don't have to write down first, because we want to save some time for a while. Okay, calculating break even. In each of the following cases, that means they're given 3 cases. Yeah, 3 cases means that this case, first, second, and third. So you have to calculate 3 times. You kena calculate 3 kali lah. Yeah, this one is one set, that one is another set, and that one is another set. So calculate the accounting break even and cash break even points. Remember, in the question, in the formula we have 3 break evens, right? Accounting break even, cash break even, dengan satu lagi financial break even. Yeah, but since the question asks you only 2, yeah, which is accounting break even and cash break even, only just answer 2 je. Yeah, betul. Yeah, because either the question asks you 1, 2, or all 3. Yeah, it depends on the question. Right, but normally I will ask all. All right. So calculate the accounting break even and cash break even only. That means they ask you to accounting and cash break even. So if you look at the formula number 5 and formula number 6 only. Yeah. So ignore any tax effect. Yes, never mind. So you need to calculate 2 sets. For the first one is accounting break even for the first set. Yeah, second set and third set, and cash break even for the first set, second set, and 3 set as well. So if you look at the solutions, solutions. This one. Just using the formula straight away, and then you can this one. Yeah, you can. All right. So you can snap this picture for this one. Okay. So this is how I use. Yeah. So that means we have 3 sets. So you just use the formula, one formula for the same formula, but different answer because of the different level. Okay. Yes. Because, okay, why they have first, second, and third? Okay, because in the question, you see the first one, the second one, and the third one. So you need to calculate 3 set lah. Yeah, you can calculate 3 set. Same goes to cash break even. Yeah, 3 set. So you need to calculate first cash break even, second cash break even, and third cash break even. Okay, for those who just arrived, you can snap this picture for answer question number 4. Okay. So just follow, Arina, you just follow whatever information that has been given. So the most important thing is the formula. You need to memorize the formula. Like I told you in the formula number 5, formula number 6, and formula number 7. But for question number 4, we didn't use formula number 7 because it's not been asked. Dia tak tanya lah. Okay, so that is a mistake. Alright. Please be careful. This one is plus depreciation. So based on last semester's experience, they accidentally minus depreciation. Salah lah. Because why? Our assumption is this is a net fixed cost. That means the fixed cost after depreciation. You need to include depreciation as well. So that is initial investment. Initial investment maksudnya meaning that the early capital that you use to buy fixed asset. For example, if you buy a vehicle for 50,000, vehicle for 50,000, and then your depreciation is 10,000. So therefore, your net fixed asset is 40,000, right? So you need to include 10,000 as well. So you want to make it 50,000. So that is an assumption of net fixed cost plus Depreciation, which is an initial investment to buy a fixed asset. Okay. But for this one, a fixed cost, that means why, okay, please bear in mind, why this cash break even we didn't plus depreciation? Okay, I think accounting students know this one. They should know this one. Because depreciation is not a cash, isn't it? Depreciation just a reduction of the value, isn't it, Tiang? Yeah, logically, depreciation is not a cash outflow. So that's why for cash break even, it didn't include depreciation. Ya, tak masuk depreciation sebab depreciation bukan cash. Ya, dia hanyalah value turun sahaja. But for financial break even, okay, why we need operating cash flow? Because remember, if you learn finance before, I'm not sure whether you learn accounting, I think they learn. We have three types of cash flow, right? Three types of cash flow. Cash flow financing, cash flow investment, and cash flow operation. OCF, CFO, CFF, CFI. And one of the common cash flow is operating cash flow, which is CFO. Yep, I tak tahu you ada belajar cash flow before in accounting? No, tak belajar. Okay, I think you will learn someday lah. Okay, so they include operating cash flow. So operating cash flow is initial investment divided by PVIFA, AKN. Alright, any question for question number 4? This is a straightforward question. Yeah, so you just use the formula and then put the figures and then operating mathematically. Yeah. Okay, now, if there is no question, let me proceed with, let's see. Let me check with number 5. Okay, now, I want to introduce to you formula number 9. Formula number 9 is degree of operating leverage. This is to measure the efficiency of a company. Yeah, the higher the DOL, the better it will be. Yeah, I mean, we want to measure the efficiency of the company. Yeah, the higher the value of DOL, the better it will be. The lesser the value of DOL, the inefficient the company it will be. So the formula for DOL, degree of operating leverage, is equals to 1 plus fixed cost divided by OCF. OCF means operating cash flow. And if let's say OCF is not given in the question, yeah, so you need to calculate OCF first. And then after that, you can use OCF to put in DOL formula. Ya, so kalau tak ada OCF, kena cari kat sini lah. Cari dulu. Selepas cari, after you find the value and then you can put. Now, let's have a look at question number 5. Okay, this one you can write down. This is calculating break-even, but we need to look what kind of break-even that the question asks you. The project has the following estimated data. Yeah, the price per unit is $62 per unit. VC or variable cost $41 per unit. Fixed cost $15,500. Required return 12%. Okay, so the purpose of required return is this one. K. Yeah, this is to put K, this one. Yeah, the purpose of rate of return here is to find operating cash flow whereby the PVIK is rate of return. And then initial investment 24,000, life 4 years. Ignoring the effect of taxes, what is the accounting break-even quantity? So the first question they ask you is to find accounting break-even quantity. Okay, now you can write this one first. Okay, so I take out this information. Price per unit $62, variable cost per unit. It is very important, it is very helpful if you put like this. So you can refer to any information later on when you do calculation. Okay, you may write this one first, sorry. Alright, while you are writing, let me explain to you. The first thing you have to do is to find depreciation amount. Depreciation amount, because in the formula, we have this one, depreciation. Yeah, so we need to find depreciation, which is not even in the question. The formula is initial investment divided by number of years. Yeah, the investment that you made to purchase a fixed asset, that means 24,000 divided by 4 years. That means the depreciation will be $6,000 per year. Yeah, so nilai $6,000 tahun lah. Yeah. Okay, then now you can calculate accounting break even, whereby this is the formula: fixed cost plus depreciation divided by price per unit divided by variable cost per unit. So see, they ask the formula asks you for depreciation, right? Which depreciation is not in the question, kan? So you kena cari dulu. So this is how. Okay, you may write down this one. Accounting break even is formula. Okay. Normally, the break even, the answer in units, quantity, yeah. Kashina, jadikan saya admin jap dalam grup WhatsApp. Jadikan saya admin dalam grup WhatsApp. Nak remove Faris. Saya nak remove Faris. Okay, thank you. Saya tak tahu dia drop ke tidak, tapi kalau dia dalam tak datang ni, saya remove je. Okay, dah. Dan? Dah yang? Not yet, okay. Okay, now, seterusnya cash break even, using the same formula. Not the same formula, like different formula. You just put the figures, fixed cost, and then divided by per unit minus variable cost per unit, which is here lah, Okay, and then the next question, financial break even. Okay, but the problem is you need to, okay, you write down first so I can explain to you what it is. Kat sini dulu lah. Okay, for financial break even, this is the formula. However, you need to find OCF because OCF tak ada kat atas ni. There is no OCF here. So you you need to find OCF using this formula. Guna formula number 8. Okay. So go back at PVIFA table, yeah, in the appendix, yeah, and then you can find 12% and 4. This is the value. Yeah, I hope that you still remember, yeah, how to read PVIFA table. This is the value. If you miss some part, let me know so I can scroll up again. OCF means initial investment divided by PVIFA KN. So let me know if you, while you are writing down, you might not understand how to get those figures. Let me know. While you are writing, you read and understand. Okay, so the last part is to calculate DOL. Using this formula of DOL, which is equals to 1 plus fixed cost divided by OCF. OCF you already got up here, operating cash flow, which is $7,901.75. Just bring it down and then you calculate as usual, you will get this value. It's a simple, straightforward. Because they ask you at financial break-even quantity. But it doesn't matter. Actually, is because it is related to OCF, right? Of course, they ask it is related to financial break-even. It does not related to accounting or cash break-even because accounting break-even and cash break-even does not have OCF. Dia tak ada OCF. This is the last part of question number 5. Last part of question number 5. Sometimes sometimes they given I given you one long question. You can divide into A, B, C, and D. There is no issue as long as you follow the process, follow the question. So you can put A, B, C, and D. There is no issue as long as you put the question. There are some students here, they think that, oh, we cannot put A, B, and C, even though the question is not. Actually, you can. But because just to see, to divide the process, the questions. Or sometimes even the question given is A, B, C, and D, and then if you want to answer in one shot also, okay, fine. Because as long as you're answering all the questions. Okay, I'm giving you another 2 minutes to complete this writing. Okay, any question? Any question so far? No, DOL is not in unit. Because the keyword here is degree. Degree means the slope and the tendency. Dia bukan quantity. Degree means power, the power of efficiency lah. Dia tak ada quantity. Dia macam ratio kan, lebih macam ratio kan. Dan Dan. Siap? Dan ready? Okay. Let me check. Okay, so it is similar. Question number 6 also it's the same set with question number 5 and question number 4. And question number 6, they ask you only for financial break-even sahaja. Yeah, so just use financial break-even. So these are the solution for question number 6. They ask you for financial break-even quantity. But you see, the problem is, okay, kejap. The problem is, they given you accounting break even. They given you an answer already. Accounting break even and cash break even. So what I want you to do is, okay, or what I want you to do is study by yourself. Yeah, study by yourself on how to get this one. Okay, but before that, let me brief you. Why, even though the question is break even quantity, kat mana soalan tadi? Okay, even though the question is financial break-even quantity, but it is not easy to find. Because why? Let me tell you. Financial break-even quantity, the formula is fixed cost plus operating cash flow divided by price per unit minus variable cost per unit. But the problem is there is no fixed cost. Yes, we have an information. OCF, there is no information. Price per unit, there is no information. Variable cost per unit, yes. That means the missing information is OCF and price per unit, which is very difficult to do. Since there is no OCF and price per unit, you need to do backwards. Kena kira ke belakang, daripada belakang ke depan. So what you have to do is, you boleh cari operating cash flow dulu. OCF, initial investment divided by PVIF. However, initial investment dalam ni. So kena cari pula. So therefore what you have to do is initial investment multiply by initial investment formula dia tadi depreciation kali dengan life kan. Depreciation pun tak ada dalam ni. So kena kira, that means daripada bawah ke atas lah. You kena kira backwards. So another alternative is you can find price per unit dulu. Kalau tak ada OCF, you need to find price per unit first. So the formula that have price per unit is cash break even. Saya pakai cash break even because why? Depreciation tak ada lagi masa tu. So I using this one just to find price per unit. Sebab kita dah ada ni cash break even. So kita kira lah cash break even equal to fixed cost divided by price per unit minus variable cost per unit. So price per unit kita tak tahu. Fixed cost $150,000 minus divided by price per unit minus 24, and then you dapat 38.15. Ini price per unit. Okay, so dah ada. Ini selamat lah. Price per unit dah ada, selamat lah. Cuma fixed depreciation you tak tahu lagi. So what you have to do is guna formula ni pula. Use this formula to find depreciation sebab kita ada accounting break even quantity. So tadi RM38.15 kan price per unit dah ada. Masukkan je. Tolak 24, 150,000 plus depreciation tak tahu. So depreciation you dapat 39,610. Barulah you kali 5 tahun untuk cari initial investment. So this ada amount. Baru you boleh cari OCF. Okay. 198,050 divided by PVIFA 10% sebab kat sini 10% dan 5 tahun. So you dapat 52,241. Barulah you boleh kira financial break even. Kokok kalau soalan ni keluar dalam exam bermakna you kena kira daripada bawah ke atas lah. God willing, insyaAllah formula will be given lah. Cuma you kena pandai, maksudnya maknanya pusing-pusing formula. You need to know you know how to not Not rotate, play around the formula. Yeah. Okay, sebab apa? Kalau ikut prosedur, by you following the procedure, biasanya accounting break even dulu. Kemudian cash break even. Sepatutnya cash break even dulu sebab tak ada depreciation. Kemudian accounting break even, baru financial break even. But you can play around those data, yeah. And then OCF kena cari. So sebab tu ya, macam soalan macam ni, this is quite tricky. Nampak simple, financial break even quantity, tetapi information dalam formula ni, OCF tak ada, price unit per unit tak ada. Memanglah you kena cari guna formula lain. That is how you rotate the formula. But I'm glad that you are good in math. So you using the algebra that you should get the answer. So these are the final answer, 14,000. Okay, this one you don't have to snap the picture because at the end of the day I will give you the answers. Yeah. Okay. Tapi kena rajin salin juga because while you are writing you are studying. Yeah. Okay. Any question for question 6? Ni memang tricky. Dia tak sama macam soalan nombor 4 dengan 5. Soalan nombor 4 memang straightforward je sebab semua information ada. Soalan nombor 5 pun sama. All information available. But question number 6, information are not available. Yeah. Okay. Alright. I think until question number 6 done. Okay, for question number 7, 8, 9, and 10, that will be another set because of the different formula. Formula number 9, 10, 11, and 12. Okay, any question? Okay, if there is no question, we can take a break for 10 minutes. And then after that, I will lecture you on the third part, which is DOL and the changes of the DOL. Okay, so see you around in 10 minutes. Yeah. Okay, now let me introduce to you to the formula number 9, 10, 11, and 12. Even though I introduced to you the DOL earlier, but somehow DOL can change from time to time. Yeah, whether the DOL can be increased or the DOL can be decreased. So therefore, if let's say the quantity is changed, that means you need to find the changes of quantity, whereby the new Q1 is new quantity minus QO, which is old quantity, divided by old quantity multiplied by 100, because the answer might be in percentage because multiplied by 100. So therefore, since since percentage of quantity is changed, definitely OCF, that means operating cash flow, is changed as well, whereby the old DOL multiplied by changes in quantity, which is equals to percentage change in OCF. Therefore, the new OCF will be old OCF multiplied by 1 plus percentage change in OCF. So now have a look at the question for question number 7. Already there. Dia dah bagi siap-siap dah. It output rises 78,000 unit. Okay, meaning that if you look at this question, this is a QO, Q0, and this will be Q1. That means the increment from 73,000 unit to 78,000 units. So you expect that the DOL and OCF also increase as well because of the quantity increase. What will be the percentage change of operating cash flow will be? What will be the new operating leverage will be higher or lower? Explain. Theoretically, if quantity is increasing, operating leverage should be increasing. Theoretically. Yeah, sorry, theory. But let's prove it by calculation. So this is the one. All output level, that means 73,000 units. New output level, Q1, 78,000 unit. DOL 2.90 percentage change on OCF. So for DOL, okay, I should put this one in the formula. Later on, I will update in the slide. This one I will update in the Google Classroom. Other alternatives to find DOL instead of this formula, you can use formula as well. That means the percentage change of OCF divided by percentage change of quantity. So you need to find percentage change of quantity first, which is formula number 10. Whereby Q1 minus QO divided by QO multiplied by 100. Okay, and then therefore 78,000 minus 73,000 divided by 73,000 multiplied by 100, which is 6.85, or you can put it as a 0.0685 because you divide it by 100. 6.85 tu bagi 100 you dapat ni lah. And therefore, for DOL, the question is percentage change of OCF divided by percentage of quantity. The old DOL is 2.90, which is percentage change of OCF, you don't know. Divided by 6.85, bawa ke sebelah, dia jadi darab lah. So, the answer will be 19.87. 6.85 kali 2.9. So, yes, this will be the answer. So, ni formula nombor 13 dengan formula nombor 10. 10 dengan 13 sahaja untuk question number 7. So, maksudnya kat sini, meaning that kalau output tu naik daripada from 73,000 to 78,000, the operating cash flow pun naik sebanyak 19.87%, almost 20%. Theoretically, kalau quantity naik, operating cash flow pun naik juga. Tapi DOL masih sama lah. Okay, now move on to the next question. Okay, soalan nombor 8. Question number 8 is a continuous from question number 7. Sebab dia kata in the previous problem. Maksudnya it is continuous from question number 7. Suppose fixed costs are 150,000. What is the OCF at 67,000 units? And then you need to calculate the new DOL. Yang tadi tu DOL lama 2.9. Sekarang ni they ask you to calculate the new DOL. So the solution is question number 8. Sambung balik. Fixed cost tadi 150,000. DOL sama. Maknanya old DOL 2.9. Another new quantity Q1 yang kat sini tadi. Q1 67,000. Tadi yang lama, soalan yang belakang tadi, Q1 ni kalau 78,000. Tapi dalam soalan ni, Q1 dia jatuh daripada 73 ke 67. So we want to see if, kalau logically kalau quantity decrease, maknanya dia punya DOL pun akan jadi turun kan? Dan percentage change of quantity akan jadi negatif. Kalau tak percaya, tengok dekat sini. Okay. Pertama sekali, the first one is we need to find OCF dulu. Kita kena cari OCF dia. Pakai formula nombor, formula nombor 9 tadi. Pakai formula nombor 9, nak kira OCF. Want to calculate OCF. So, 2.9 equals to 1 plus 150,000 fixed cost. Ini fixed cost tadi. OCF, we don't know. So, using algebra, bawa ke sebelah jadi 1.9. Lepas tu, bawa ke sebelah jadi bahagi je lah. You dapat this figure. OCF, you dapat this figure. Okay, first step adalah yang ini. Of course, kemudian you have to find the percentage change of quantity, which is formula number 10, iaitu 67,000, 67,000 tolak 73,000 bahagi 73,000 kali 100, you get negative answer. Sebab apa? Q1 or Q1 rendah. So you dapat negatif. 8.22. Dan kemudian pakailah formula nombor 11, which is to find percentage change of OCF, iaitu DOL lama kali dengan percentage of change of quantity, which is multiplied by negative 8.22. So you dapat 23.84% negatif untuk you punya OCF. So you tahu bila quantity dia fall from 73,000 to 67,000, OCF dia pun jatuh juga. To 23.84%. Dan barulah kita gunakan formula nombor 12 untuk cari OCF baru. So, OCF lama kali 1 tambah percentage change in OCF. Kalau dia negatif, bermakna kena tolak. Ya. So, 78,000 yang tadi, this one OCF yang lama, ya, kali dengan 1 tolak 0.2384, dapatlah yang ini. Ya, 60,000. And then DOL baru kita kena cari pakai formula yang sama, cuma yang OCF ni pakai yang baru. Ya. So, tadi mula-mula yang OCF lama yang ini kan, 78,000 kan. So, the new OCF is 60,000. So, pakai yang ni. Fixed cost masih sama. Dan 3.49. If quantity decreases from 73,000 to 67,000, the DOL increase from 2.9 to 3.49, which is considered good. Okay, let me tell you kenapa. Kenapa bila quantity jatuh, dia punya DOL dia naik? Sebabnya, when the quantity is lower, that means dia punya apa orang kata machine ataupun operation tu dia tidak terlalu pack. Maksudnya dia tidak terlalu sibuk. So they can use, we talking about operation. The more quantity, dia akan jadi sesak. Machine tu akan jadi sesak, fixed cost akan jadi lagi terlalu over operating. Bila jadi over operating, fixed cost boleh rosak. So bila you lessen quantity, bermakna mesin tu boleh relax. Then that's why dia punya efficiency tu akan jadi naik. Tetapi kalau dia terlalu naik pun, which is sometimes consider not good lah. Sebab apa? Kalau mesin tu tak pakai langsung. You have a machine, but you didn't produce any quantity. So memanglah tinggi DOL, tapi tak berapa bagus lah. Sebab apa? Under operating. So that's one. So ini dia punya final answer. I will share you the answer later on after the class. Maybe today or tomorrow. So this is the process. Question number 7 and question number 8 are interrelated. They sambung between each other. Okay, any questions so far? No? Okay, let's move on to question number 9. And then question number 9. Let me brief you a little bit about question number 9. Okay, you see here, a proposed project has a fixed cost. Dia fixed cost dah bagi. Operating cash flow, OCF untuk 7,500 unit pun dah bagi 93,200. You tak payah kira OCF yang lama. And then, what is the degree of operating leverage? Maknanya DOL. Okay, so kita pergi kat DOL dulu. Guna formula DOL, maknanya dia dah bagilah 84,000, Q kosong 75, old OCF 93,200, new quantity dekat sini 7,500 ke 8,000, meaning that 7,500 is a Q0, 8,000 is a Q1. Daripada lama ke baru lah. So dekat sini kita nak cari yang lama. So FC 84,000 fixed cost, old OCF 93,200. So this is old DOL 1.90. Sebab apa? Soalan terakhir adalah new degree of operating leverage. Kena cari DOL yang baru. Sekarang kita cari DOL yang lama. And then after that, step dia adalah kena kira percentage change of quantity, iaitu Q1 tolak Q0 divided by Q0 multiply by 100. 8,000 minus 7,500 divided by 7,500, kita expect the increase the quantity increase. Kemudian guna formula nombor 11. Formula nombor 11. Percentage change of OCF equals to old DOL. Ni DOL lama kali dengan percentage change in Q 1.90 yang you dapat kali 6.67. So you dapat 12.67 or 0.126. And then kemudian after that you need to find new OCF, formula nombor 12. OCF lama multiply by 1 plus percentage change in OCF, 93,200 yang lama tadi, kali dengan 1 tambah. Sebab ni positif, so kena tambah. 0.127, so you dapat new OCF. Dan last kali new DOL, formula dia adalah fixed cost divided by new OCF. Kalau ni baru, bermakna OCF pun baru juga. So, 84,000. Cost tak ada apa-apa perubahan. Fixed cost there is no change. Sama. Regardless of any output, 7,500 ke 8,000 ke, fixed cost are still same. Dah nama pun fixed kan? Fixed cost. So, and then you get Conclusion, the DOL decreases from 1.90 to 1.80 due to increase on OCF from 93,200 to 105008 if shows that cost increases. So kalau OCF ni adalah operating cash flow, dia adalah cost. Technically dia adalah cost. So bila output naik, bermakna OCF pun naik. Bermakna cost pun naik. Bila cost naik, DOL jatuh. Yeah. In addition, the quantity is company require more cost to produce extra unit. Yeah, macam contoh, you ada satu handphone, you punya kilang produce 10 handphones. So nanti when you want to produce another 5 handphones, therefore definitely cost also increase. Operating cash flow also increase as well. And then DOL jatuh. Yeah. Sebab tu salah satu cara untuk naikkan DOL adalah increase sale. So bila increase sale, dia punya cost dia boleh cover cost tu ya. And for question number 10 is similar with question number 7, 8 and 9. So you can study this one. But however let me revisit back question number 10. Soalan nombor 10 dia ada dua soalan. Satu, kalau kuantiti naik ke 16,000, maknanya Q1 dia 16,000. Second question, kalau Q1 dia 14,000. So maksudnya jatuh. So kita expect jawapan tu akan jadi berlainan. Dia punya changes tu, kalau output rises bermakna positive changes in OCF. Kalau output falls bermakna negative change in OCF. Sebab tu in the answer I divided into B and C. B and C. Sebab apa? Jawapan dia lain. Cara sama jawapan dia lain. You see untuk jawapan kalau naik 16,000, OCF dia naik. Kalau quantity tu jatuh untuk ke 14,000, meaning that dia punya OCF dia jatuh. So you can have a look at the step. So in conclusion, I can tell you that kita kena kira dulu kita kena start dulu dengan formula nombor 9. Selepas formula nombor 9, you boleh pakai formula nombor 10. Selepas formula nombor 10, formula nombor 11, selepas formula nombor 11, formula nombor 12. And then kalau ada alternatif macam soalan nombor 7, 8 tadi, you boleh pakai yang itu. So in conclusion, step pertama adalah cari DOL lama pakai formula nombor 9. Kemudian changes in quantity formula nombor 10, formula nombor 11 dan akhir sekali formula nombor 12. And then patah balik ke formula nombor 9 untuk cari new DOL. Okay, faham Nak repeat sekali lagi I repeat lagi sekali. First step, kira DOL lama, formula nombor 9. Second step, changes in quantity. Third step, percentage change in the OCF. Fourth step, new OCF. Dan akhir sekali patah balik ke formula nombor 9 untuk cari new DOL. So itu memang step dia lah. Sebab ini DOL lama. Tetapi kalau baru bermakna new DOL, OCF pun kena baru juga. Kalau you tengok balik the answers that I given in question number 8, 9 dengan 10, it's the same step. It's soalan step yang. Okay, so with that, for chapter 4, we already covered. Okay, I recap back again. Chapter 4 have 3 section. Yang pertama adalah section to calculate profit and loss based on total revenue and total cost. Itu yang pertama. Itu semalam Itu yang semalam. The second part is to calculate break even, accounting break even, cash break even and financial break even with including operating cash flow sekiranya operating cash flow tak dibagi. And the last part is to incorporate DOL. DOL lama nak cari ke DOL baru, kena find changes in quantity, percentage change in OCF, new OCF, at the end of the day go back to formula number 9 to find the new DOL. So ada 3 bahagian. So I dah cover yesterday formula 1 sampai formula 4. Untuk today first part formula number 5, 6, 7 and 8. And then after that formula part 3 formula number 9, 10, 11, 12 and 13. Okay, any question so far? Tak ada Okay, with if there is no questions, we end up with the chapter 4 done already. So the recording will be available later on for the part-time students. Okay, until then, see you again with the chapter 5 next time around. Till then, thank you so much and bye.